Hello and welcome to Manage Your Money. This is the show where we answer all your questions about savings and investments. Cash is no longer king. Interest rates are falling fast and stock markets remain pretty volatile. In such a situation, how should you tweak or build your portfolio? What are the best ways to make your money work for you? Over the next 30 minutes, our experts will help piece together the investments puzzle. If you have any questions regarding personal financial planning, you can send us an email at mym@ndtv.com. And remember, when you send us an email, do mention your phone numbers so that we can call you up and you can directly ask your questions to the financial planners joining us on our show. Let's welcome in our guest today. We have Kartik Jhaveri. He is the founder and director at Transcend Consulting, joining us from Mumbai. Thanks for being with us, Kartik. Let's get started and go across to our first query. And this is coming from Keshav Seth, who's 52 years old. Hi, Keshav. Go ahead, ask your question.
Good morning. My question is related to real estate as an investment. I'm 52 years old and I'm general manager in a company. About me, I pay a EMI of rupees 65,000 a month for my home loan. I have also applied for a car loan. The EMI for that will be 10,500 per month. My salary is over 1.5 lakhs, 1,50,000. I have also some accumulated savings. I am thinking of investing in real estate. Now, my question is, should I clear the housing loan or car loan first to be eligible for another home loan? My wife also earns rupees 25,000 per month. What would be the maximum amount of loan I would be eligible for?
All right, let's ask Kartik. Kartik, you've heard the question. What's your answer?
So there are lots of things that Keshav here wants to know. So let's first start with the home loan and all the other loans that you're talking about. So your income is close to about 1,50,000. If you add your wife's income, another 25,000 like you mentioned. So totally you're earning about 1,75,000 as a family. Now, how does these home loan EMIs work? To give you a rule of thumb, let's say you will need to pay about 1,000 rupees per lakh. 1,000 rupees as an EMI per lakh. So which means if you're going to borrow, let's say, 1 crore, your EMI should be approximately in the range of 1 lakh. So this is for you to understand what sort of loans repayment that you need to do. Now against that, if your income is about 175, the banks would be more or less happy to finance up to a level of, let's say, half of your total salary, which is close to about 90 odd thousand rupees is what they will allow you as EMI, which then in turn means about 90 lakhs of total loans. So that's the question, answered in terms of how much loan will you be able to get. Now, whether you should invest into another real estate and whether you should pay off this loan or not. See, remember one thing, for a good financial plan to happen, for a good investment strategy to work out for you, ideally do not try and go beyond 50% of your total income as all your EMIs put together. So which means whether you're paying for a car loan, personal loan, home loan, everything put together, try and have an internal threshold of about 50 to 55% of your total earnings. Because you see, if you go beyond that, then there is very little left for you to save. In fact, pretty much the remaining you'll be using up for your regular monthly expenditure, household expenditure, etc. So you will have nothing to build an asset from. You will not be able to save any money and therefore create more assets out of that money. So stay at 50% threshold. Now, should you repay, if you had some savings, should you repay the loans? Now understand that home loan is one of the best loans that you can get. And reason for that is simple, that it is cheapest loan. It is the loans that you get these days are around 8.5 odd % plus or minus. And against that, your real estate as a property or as an asset class itself is sort of growing at somewhere in the range of 12 to 15% a year, which means the cost of your asset, you are paying about 8.5% as the cost for that asset, for which your asset itself is generating 12 to 15%, which is why we don't really have a problem letting the housing loan continue for as long as it goes on. What you should try and ideally do is, whatever savings you have, now I'm assuming that these savings would be in equity mutual funds or fixed deposits or some such things. Use the interest if you are in fixed deposit, or use the profits of a mutual fund investment. Use those profits and interest to actually make a prepayment. Don't use up your capital, because once you use up your capital, it's like a one-way street. Once you pay off the home loans, then what? Psychologically, you will feel happy, but you've not been able to multiply your assets. So here is a strategy by which you keep your home loan going, make prepayments for sure, but out of the profits. That way your savings also remain intact, and maybe those savings give you the opportunity of creating other assets in times to come. So there are a lot of things that you need to think about, and then consider all these factors and then make a decision. But I don't think at this stage you are in a situation to go in for another real estate property. Firstly, you will not get enough loan for that, and then the other thing is, I don't think you should be spending more than 50% of your monthly earnings in EMIs.
All right. So the advice is perhaps not to go in and take another loan to finance an investment into real estate. Now we have an email that we've got from Ashish Agarwal. He's 36 years old and he's an insurance sales manager. Now Ashish has some goals for himself. He wants to have 50 lakh rupees for his child's education 10 years from now, 1 crore rupees for the child's marriage 15 years from now, and for his retirement, which he thinks will be 24 years later, he'll need 2 crore rupees. Now he says his salary is just about 30,000 a month, and he wants to know which mutual funds can he invest in so that he can cover his goals. For now, he has some cover when it comes to insurance. He has term insurance worth 70 lakh rupees, and he has a health insurance worth 10 lakh rupees. So Kartik, do you think he can actually make his goals a reality considering his current income?
You're quite right. As I was even hearing the question, I actually figured that the budgets and the estimates would be much larger than what he actually earns. Or perhaps, in this email, he's not been very clear about the monthly salaries that he's getting. Because if he's somebody who can afford
Kartik, let's assume that anybody who has these goals, this much corpus for child education, marriage and retirement, how much will they have to allocate to different mutual funds to get to these goals?
Precisely. So I was just about to say that I'm very happy that he's got term insurance and he's got his health insurance sorted out. And someone having a 70 lakh insurance obviously has a much higher income than 30,000 a month. So maybe there's some little confusion in terms of how he's reported his income. But anyway, having said that, let's look at some of his goals. So if he has to create a corpus of about 50 lakhs in the next 10 years or so, obviously he needs to invest about 20,000 per month into an equity mutual fund through the SIP route. Now, if he does not want to do equities, then just for sake of argument, he will need to, and let's say if he is liking a fixed deposit or he wants to do a recurring deposit, then he will have to invest about 40 to 45,000 a month. So that's how much the variation is. If you want to go to a very safe and conservative strategy like fixed deposit, recurring deposit, vis-a-vis an equity mutual fund. So I would suggest definitely equity mutual fund, because it's got the potential to create the kind of corpus that he wants and in the time frame that he wants. So 20,000 is his budget for his first goal, which is for his child's education. For the child's wedding, he will have to again invest about 17,000. Now, we are all assuming that he's going to earn about 14 to 15% rate of return, and which is a little shade lower than the historical average witnessed over the last 20 years or so. So which means the probability of this happening is as high as about 90-95%. The third goal that he had was he wants to accumulate 2 crores for retirement. And of course, retirement being about 24 years away for him, because he's 36 now, obviously this means that he'll have to put away just a small amount of money, say about 10,000 rupees for this particular goal, which means in totality, his current budget looks like 47,000 rupees, which is way above the income he's reported, which is why I said that his income actually might be a little more. But for someone like him, 47,000 is what he needs to invest. And for some reason, if he does not have this money right now, or somebody does not have these budgets, then perhaps there are a couple of options that one can think about. One is to postpone some of these goals. I mean, especially goals like marriage and things like that, you can't postpone, but we'll have to, think about taking some loans for that. And loans will be affordable because his income will also go up, and that's an assumption that we are making. The other thing that we are talking about is an education loan. So if education does not get fulfilled from his SIPs, some point of time the child will have to go on and take some education loans. There are certain mortgage, moratorium benefits also which are available. Mortgage benefits are also available. You can, put your property up on a loan and, take some loan against that property. And that's the way also you can fund education. This is if he really runs short of it. But over a period of time, for right now, what he should assume is whatever he is earning, the maximum he can save, he should try and invest this money through these SIPs, and that will help him achieve his goals.
All right. So we've got a comprehensive answer for Ashish's query, and you'll have to allocate a larger amount to reach those goals in the time frame given. We're going to slip into a break at this point in time. Kartik is with us. So when we come back, we'll take more of your queries. Stay with us.